Hello, my name is Sarge and I'm here with Richard, the founder of Wealth Estate, and we're here to talk about the online program and answer all your burning questions on all things property. So Richard, as a business owner, how can you help me to invest in property or guide me to invest in the right kinds of property?
Yeah, business owners usually have cash reserves that they're retaining for working capital. And so those cash reserves usually are stuck in an account somewhere. And in order to remove those funds to invest in property, then naturally people would have to pay tax on pulling that money out. So what we help clients do is do an intercompany loan from one company, their trading company usually, into their property investment company, and then use the funds inside there then to invest in more property. Then the returns can be generated inside the property investment company, and maybe not, but those funds can then be returned back to the trading company at some point later on. So at least you're using your working capital in a way to generate more income, basically.
Wow, that's really smart. And when it comes to mitigating risks, I suppose as a business owner, that really ties into that.
Yeah, absolutely. And the tax efficiencies exist as well with using pension funds alongside the trading company profits as well. So on a yearly basis, you can send a maximum, of £60,000 per director into a pension fund. And those funds come out of the company profits before tax is levied on that company. So you're saving corporation tax on that £60,000. That can then go into the pension fund, and the pension fund can then invest into more property, or the pension fund can lend the money directly back to the property investment company as well. So as long as the directors are the same, as long as the members of the pension pot are the same, then we can just move money around and mitigate tax in the process as well.
So it's about being efficient with the flow of funds and money.
Yeah, that financial literacy is something that's normally lacking with business owners, because as going through the education system, we're not taught financial literacy at school. So those things are learned as you go through business as a business owner. And we're here really to give that financial literacy to our clients so that then they can make better, more informed financial decisions.
I think financial literacy is something which is key because we don't get taught that kind of stuff at school. But is this something that we'd be able to discover on the course?
Yeah, so the consultancy process starts with the fact-finding part of our process at the beginning. So we understand every element of our clients' financial circumstances,
Right.
so that then we can help them make more decisions. And of course, every single one of our clients has different circumstances. They're coming from a different place. Excuse me, they're starting the process from a different financial standing. It's not a one size fits all for every single one of our clients. So once we understand all the different revenue streams, whether they're PAYE income or whether it's through business, or whether they have children involved in the process as well, we can use the children's marginal tax rates to make it even more tax efficient. And then of course capital gains tax planning and inheritance tax planning is really important for that generational wealth as well.
Right. You mentioned people coming in at different starting points. What would you say to someone who feels like they don't have the funds to invest in a property at the moment, but it's something which is on the horizon for them, and they feel like there's too much risk involved, or they don't really know where to start?
Yeah, we can put together financial plans for that. So we build out a full business model for them, business plan, if you like. So understand where those financial milestones are along that whole journey. So people may think that they don't have funds to invest in property, but once then you look at other financial assets in the background, stocks and shares, crypto, ISAs, those kind of things, of course, cash reserves, but then pension funds, and then equity within their own home, or maybe other rental properties that they own as well. We can leverage all of that equity and then use those funds to invest in property. But of course, you would want to do it in a structured and strategic way. So we would make sure that we prove the concept in the first instance, get the process and procedures and systemization set up, so that then they can scale from those humble beginnings as well.
Right. So what it sounds like is that strategy is really, really important.
It is, yeah. Not every property strategy works, but just doesn't work for every client and doesn't work in every area of the UK. So that fact find at the beginning, that understanding is really important to figure out exactly what will work for you as a client.
Got it.
And then we can implement that. Once we've understood the strategy, then we can find an area for that property strategy. Once we've got the area, we can understand what the tenant demand is. So again, stacking all of those odds in your own favour, basically.
Okay, Richard, with the current inheritance tax rules, how can I protect my portfolio and property?
So owning property in your own name is an issue for inheritance tax planning. Obviously, those assets within your personal estate will be taxed at 40% for your beneficiaries. So owning property in a limited company doesn't necessarily mitigate that 40%, but it's a more convenient place to do financial tax planning. If you own property in a family investment company, then that does actually mitigate even more tax as well. So every dynasterial family that you would ever have come across or heard about that have passed assets down the bloodline, they would have done that inheritance tax free using those tax mitigation strategies. And our chartered accountants and our tax advisors help every single one of our clients, along with our help, of course, to understand how we can do that by making plans for the future portfolio, but setting those foundations up right at the beginning so you're not compounding the same tax issue every single year.
Got it. And in terms of planning for the future, with pension funds, is it possible to withdraw from your pension fund early to invest in a property, and what are kind of the factors around that?
Yeah, absolutely. So most people's pension funds are locked away, of course, and you can access those at 55. You could take out 25% tax-free. But you can also access those funds early. So if we move the traditional pension pot into something like a SAS pension or a SIP pension, then you can use those funds to then leverage those funds into a limited company, which would be your property investment company, and then use the funds inside the property investment company to invest in more property. Those funds have to be returned over time, and there's lots of HMRC legislation surrounding it, but our pensions team help every single one of our clients to go through that whole process.
Got it. So with regards to bringing returns to your clients, what kind of returns can your clients expect when they begin their journey with their property investment portfolios? Does it depend on their appetite for risk?
Yeah, I mean, that appetite for risk is an important factor, but the most important thing is understanding which strategy is going to work for a client, because we could suggest a strategy that could achieve 20, 30, 40% return. But if that client can't invest the time into that asset, then that means that whole process needs to be hands-off. We need to use other people. So leveraging other people's time, obviously, is a cost element to that as well. So if we've got a client that could achieve 30% return on investment from putting more time into it, and then we use somebody else's time to leverage against that, we could bring that return on investment down to, say, 15 or 20%, which is significantly better than leaving the money in the bank at 4%.
Definitely, yeah. And with regards to the leveraging other people's time, is that something that comes into play when you start to take on more complex investment and portfolio strategies like HMOs or that kind of thing?
Yeah, absolutely. So with a HMO, the cost of management is higher than a buy-to-let by a few percent, but we need to analyse all of these worst case scenario figures against our return on investment to make sure that those worst case scenario figures dictate a 20% return, and we don't make decisions just based on emotion or conjecture or opinion. We're basing the decisions purely based on those numbers, which the data-driven analytical tools that we provide to all of our clients enables those decision-making processes.
Got it. And how involved are you as a company and a program with your clients on that journey? Is it something you touch base on periodically, or is there a constant interaction, or does it really depend on key moments in acquiring property or along that journey?
Yeah, it's a fully handheld process right from day one. So all these you might see these fake property gurus online who are saying a client can be a millionaire within the next 10 minutes. Well, they're just selling courses. What we provide is full-on consultancy support right from day one. So it's a fully handheld service, but not just from me personally, it's from the whole team. So our accountant, our tax advisor, our mortgage broker, our property sourcing team, our pensions team, those highly regulated individuals are wrapped around every single one of our clients right from day one. We're by the side of our clients, doing all the due diligence and making sure that they're making those data-driven analytical decisions all the way through the process.
Fantastic. And what kind of properties are you invested in or investing at the moment, and what kind of projects are you working on?
Me personally, I invest in single let buy-to-let, so houses and flats, HMO property, anything from a 6-bed to a 14-bed. I've got a 20-bed HMO, and then furnished holiday lets, Airbnb type properties. And then I invest in strategic land investments as well, so land where I can add value by gaining planning permission. Those value adds has been sort of the benchmark of everything that I've done over the last 25 years in property, always buying an asset, adding some value to it, and either selling it or refinancing it and using the funds again into the next project. And so that cycle continues.
And with the land purchasing aspect of it, is that something which is a bit more complex with acquiring the planning permissions before you?
Yeah, I mean, every part of property investment, land development is complex. But if you've got somebody like us by your side, then we take that those decision-making processes on board with you and help you at every element of that journey. So it's complex at the beginning. Every client, every successful client starts in exactly the same place. Hardly any knowledge in property or land, and wanting to grow the portfolio. So we give them the knowledge up front, and then we help them implement it all the way through.
Well, how did you start out? Because you must have started, ground zero somewhere where you had to build up your portfolio to get to where you are today, which is amazing.
Yeah, well, I've been investing in property for 25 years, and I've been a business owner for 27 years. So I started in business, and I made some profits and wanted a place to put those profits, and worked it all out by myself all the way through. The first property that I bought was a rundown fish and chip shop that had gone bust, and they were selling the building, and I bought the building. I got planning permission on it, and I sold the building to another property investor. They did the work on it, but I made a £20,000 planning gain in the middle.
Brilliant.
And I was 21 years old, and I did what every 21-year-old would want to do with £20,000 at that time, and I bought myself a sports car and realised that I'd made the worst financial decision of my life. Sold the car and then invested that £20,000 into another property that I turned into a HMO, and then so that process continued, and I ended up with 7 HMOs on one street 23 years ago now.
Brilliant. There's always a car involved at one point.
Yeah, always.
Brilliant. So that's such a journey that you've been on, from the fish and chip shop to investing in those HMOs by the end of the time you reached your 20s, and now you've kind of built yourself up to this place where you've created wealth estate. And what is it that you're trying to bring to your clients? Why should clients consider wanting to take on the program or the course if they're just starting out, or if they're already some way along in their investment and their property journey?
Yeah, every single one of our clients wants to get to the next level, and we've helped hundreds and hundreds of clients get there, and it doesn't matter what that next level is. Everybody's got a different opinion of that. So they're either wanting to get started in property because they have funds to invest, or they already have a portfolio. Maybe it's in their own name, maybe you have to restructure it to invest further. But to expect from us is just pure handheld consultancy support right from day one. We don't sell courses, we don't leave people to their own devices. What we do is we figure out where the knowledge gaps are. As human beings, we're only fearful of things that we don't understand, aren't we? So it's understanding where those knowledge gaps are first, fill in the knowledge gaps with the information that our client needs to take the next step. Take that next step, and we're very, very process driven in the way that we go through this. So figure out what the strategy is and then help them to invest more in property.
Brilliant. So Richard, what does this program involve, and how does it differ from some of the other offerings that are out there in the market? You mentioned that there are these property gurus who sell you a bit of a dream overnight. Yeah. What can people expect when they're coming on board?
So there's hundreds of people out there selling property courses, and that's absolutely fine if that's their business model, but that's just not what we do. So our program contains information, but there's no point us giving you information if it's incorrect for your journey. So we figure out what it is that you're lacking in terms of information and education, etc., and we fill those knowledge gaps. Once we've filled the knowledge gap, then we're able to then figure out exactly what strategy that you could deploy that would be successful for you. Every property strategy is different, every client is different. So once we understand what will work for you in terms of how much time you can invest, how much money you can invest, and what your tax efficiency situation may be, then we can suggest 1, 2, 3, 4 different property strategies. Once we've got an idea of those strategies, then we can understand where we can invest those property strategies, because every property strategy works, just not in every area of the UK. So that data-driven analytics and the tools that we use will enable us to figure out where we can get the highest return on investment possible. When we're looking at return on investment, it's not just from a cash-on-cash return point of view, it's from a total return formula of what capital appreciation that property will achieve over time. So again, we use historical data and projections to figure out exactly which area in the UK to invest in as well. People may want to invest close by them so they can go see this property, touch and feel it. But in all honesty, as a sophisticated investor, we don't want to be hands-on with these investments anyway. So it doesn't really matter what area of the UK it is. So what we can do then is we can go find the best return on investment area in the UK and deploy our funds into that property in that area. When we work out the total return formula, we can add in a return on investment from the amount of money that we're leaving in the project, and then we can add in the capital appreciation figure as well. And then when we put those two together, that's quite powerful when we understand how our investment will compound over time. And that's where generational wealth is built in property. And every 10 to 15 years, historical data tells us that house prices double every 10 to 15 years. So that's where the heavy lifting is done from a capital appreciation point of view, from a generational wealth point of view.
Right.
Once we've identified the area, then we want to understand what the tenant demographics are in that area so we can make that property appeal to that particular tenant demographic, which will then increase our return on investment as well. So we hold our client's hand all the way through that process. And then once we're generating the profits, that's when our highly regulated tax advisory team can then figure out exactly how we can mitigate the most amount of tax out of the profits that we're making, so that you keep more of the money that you're making. Because in investments, it isn't about how much money you're making, it's about how much money you're keeping. How much of that money that you're keeping you can redeploy into more assets to give you more income, basically.
And so there's a couple of things that I wanted to touch on that. So proximity to your investment property isn't always, because people think they want to buy somewhere where they can go and visit and they can keep tabs on physically very easily. You're saying that's not super important or a prerequisite? You're really looking for the highest return on investment? Or
yeah, from a sophisticated investing point of view, all we're looking at is how much money we're leaving in the project and how much money we're making on that project.
Okay.
But from a personal point of view, our clients may want to go and see that property and may feel like they want to look after it.
Yeah.
It's not our job to dictate to our clients what they do, but it's our job to give them the options that are available to them and discuss the pros and cons of each one of those options. So investing close by can be good, but if the return on investment is only going to be 2% and you can invest 20 miles out from you, but the return on investment is going to be 10 or 15%, then that's a decision that our clients need to make for their own purposes.
And these kinds of there's a lot of, it sounds to me like there's a lot of analytics that goes into what you do, especially from the advisory perspective. And so is it from existing data that you're looking at, or from your current investments where you're being able to pinpoint areas and locations in the country which are kind of ripe for investing or going to give a higher return?
Yeah, so we provide all of the data-driven analytics and all of the tools to all of our clients. So they're using what us as sophisticated investors will be using on a day-to-day basis. They don't need to go out there and try and find them, experiment and practice trying to find these tools. We provide them. They're either our tools or the ones that are out there already. Once our client is using those tools, it literally takes them a couple of minutes to analyse the area or analyse the deal or analyse the tenant demand. And that's when making more informed financial decisions can significantly impact the rest of your investment journey and get you to your goals quicker.
And about the investment journey, everyone's on their own personal journeys with their investment strategy. But how has your investment journey changed over the course of the last 10, 15 years? There have been things like the pandemic and there have been financial crises and those kinds of things. Have you had to adapt or change your approach in those times?
Yeah, property investing is all about adapting really to those changes. But if we understand the data, then that's where we can make better decisions. And not keeping tabs on your own portfolio is a recipe for disaster from that point of view. So all of our tools are constantly analysing what our portfolio is doing. So everybody is at different seasons of their life. You know, when I was in my early 20s, I didn't have a wife, I didn't have children, so I didn't have all of those other commitments in the background, and I felt like I could take more risks with property. And if I ended back in a one-bedroom flat without any vehicle, having to, you know, walk to work, for instance, then it didn't really affect me personally. So I could probably take more risks at that point. Obviously, later on in your life, as you enter different seasons, and specifically so when people are in their 60s, 70s, and 80s, we still have clients in those later years that are investing in property still, but they've got obviously different motivations at that point than when they did in their early 20s. So what we do is help clients plan for those different seasons of their lives as well. And maybe somebody in their early 30s and 40s are only just starting to think about how they're going to pass their assets down to their children, for instance. But if we make those decisions right at the beginning and make the plans now, then we're not compounding those same tax issues moving forward. And it makes it easier to pass the assets down as well.
So it looks like you cater to a range of different types of clients. And what kind of clients do you primarily work with? And how does what you do vary depending on their risk for appetite, investment strategy, and also where they're starting off? I'm assuming you've got people who are right at the beginning of their journey and then people who are kind of quite much further along high net worth.
Yeah. We do look after every single client on that journey that are at different starting points. And our high net worth individuals, for instance, we help them to leverage the funds that may be in other investments where they can invest those funds to get an even higher return. So usually clients with a little bit more experience are able to achieve 30 and 35% return on their money. And we help them to build very, very strong, structured, strategic portfolios. We can either do that from a completely hands-off point of view. Usually high net worth individuals have high-profile jobs or they own successful businesses where they are very, very time poor. And I would say 75% of our client base are busy professional people who are time poor. So in order to leverage other people's time, we can then grow the portfolio in a structured way where we're using property sourcing teams to bring the properties to our clients. We help them with the due diligence on those properties, and our clients, we have clients that are buying 20, 30, 40 properties at the same time, buying other people's portfolios.
Wow.
Because they realise the importance of, time is our biggest limiting factor and our biggest commodity really, and we need to keep hold of that. So using other people to bring properties to us, using us to do due diligence, creative financing strategies to purchase those portfolios, and then to scale in a very structured and strategic way.
Brilliant. And it sounds like with the program, it's very, very catered individually to the client based on where they are in their journey. What kind of advice would you have to someone who's just starting out and who's thinking about taking on the program at Wealth Estate? And what would you say to someone who feels like they just want that little bit of a boost? They've already amassed a bit of a portfolio, but they kind of had a bit of a crossroads.
Yeah, I mean, that's a really good question because I've already made all of those mistakes over the years. I've had 25 years of making mistakes. I've never had anybody to help me get to where I am today. So, and making those mistakes doesn't necessarily cost money, it just costs time. And you can't build a portfolio quick enough because all of a sudden some money's locked in over here and it can't be released, and then we have to wait a long period of time before we invest in the next property, and making those wrong decisions and locking money away just stunts the growth of your journey, really. So I would say just to every budding investor in property is just to invest in themselves, invest in that knowledge, to give them that strong foundation so that they can leverage that knowledge to invest in more property. And practice makes progress in property.
Yes.
So it's about just taking action and making sure that you're using trusted professionals. And I've built that team around me that I then give to every single one of our clients. So they already have the accountant, they already have the tax advisor, they already have the mortgage broker, the property sourcing teams to bring them, the pensions team that can help them to leverage those funds. And they're trusted professionals, highly regulated individuals in their industry, and they don't need to practice, they don't need to experiment, they don't need to go search for these people. I can provide those as a one-stop shop, end-to-end support process for every single one of our clients.
Brilliant. Where do I plug in?